Okay, today is December 7, 2012. Let's take a look at Google. From the last video that I put out, I was talking about this 705 area. That's going to be some heavy resistance there because we see this resistance support line here and also the 50-day moving average and also the Fibonacci retracement level here. Let me put this up. And you could see that 50% retracement as well. And then there's a lot of people is looking at the obvious here, which is this potential inverted head and shoulder here, that could be forming. See, here's the left shoulder, the head and possible right shoulder here. But be sure to not to overlook some of the possibility because this is very obvious to that it could turn out to be a false move here. Because let me alert you to the other pattern that I'm looking at is what I call the bear flag. Okay, if you look at this and then just copy this right here, here's the bear flag that we could see this actually gonna break down here, right? So you gotta be careful on this because it could break down and then come back down to this level here because you could see the 50-day is turning down and the market sentiment is negative, and also this thing is kind of look like it's trying to roll over, so you got to be careful on that. And there's this resistance at 705. So with a head and shoulder pattern or inverted head and shoulder pattern that have a slopey neckline usually is not that reliable. For a simple fact that the head and shoulder and the inverted head and shoulder is so obvious pattern anyway, most of the time it is not reliable. So when we look at these kind of stuff, we have to look at the not so obvious because the market always punishes the obvious, right? Because it is that simple, then everybody will be making the right trade on the right side of the trade all the time. So that's why gotta pay attention to this possibility of developing this bear flag here. Okay.